just chatting. Christy is on the admin side for the Golden Group. Just got done talking about mentioning Don's name. So we were just talking about cross country's role kind of in the loan process. I said, generally speaking, a lot of probably people in the process, admin, agents, and especially home buyers think really the lender's only involved from the time we start a contract until they close and get the keys. I say for me personally, yes, there's a lot of communication, a lot of dialogue, a lot of emails in that frame. But in my case, and for I would say good, veteran loan officers, as much of the communication is even before contract. Telling a buyer, yes, they're pre-approved, but also getting into payments, down payment, closing costs, different loan programs, whether it's a 30-year and a 15-year or a fixed or an ARM. We're talking about, first-time home buyer grants and things of that sort. The time that's not the best to talk about that is, hey, Sean, I just put in an offer. Now, I got to do my home inspection. I got to get my earnest money. I'm trying to close in 3 weeks. Let's talk about the 100 different programs out there. As I tell a customer, is you want to do that work on the front end before, so that when you're putting in an offer, you have a pretty good idea of what you're doing. Not as though you have to make a decision on the loan type or program or term, but at least so you have an idea going into it and you're not stressing out with all these decisions after the fact. And then after closing too, cross-country mortgage, we've got a pretty good sort of in-house sort of follow-up program, kind of like the Keller team and their 33 touch and all that. We like to be that customer for life. And I'll share a little story about that before we're done here. And by the way, Maria and iPhone user, this is kind of an open dialogue. So I kind of made a little punch list of things to chat about here, but if there's anything specific you want to cover, feel free to chime in or, speak up anytime. Oh, hold on. Sorry, the waiting room is not real.
Sean, one of the things we do, and I'm sure you do it as well. I know myself, I let the customers know, the client, anytime they're out looking at a property 7 days a week, any time of the day, give us a call with the property address so we can run payments based on your scenario. That way they have an idea what that house is going to cost them, so they're not surprised when they make loan application and see what the payment actually is.
Yep. The file I have open to me right now is a buyer who is kind of pushing the limit on their qualifications. And I said, send me the property detail. And they sent it. And I said, oh, this is a condo. It's got an HOA fee. I was like, ooh. So I'm kind of like cringing because now we have an HOA fee. Things just got a little tighter. Then I pulled up the taxes, and thankfully the taxes for a $310,000 house, the taxes are under $4,000 a year. So we're just getting under the cover where this is going to work, but it's all about communication. And yeah, 7 days a week is Don, go ahead and do your little expression about 7 days a week.
You're working, I'm working.
There we go. Yeah, Don, the t-shirt, to be trademark t-shirt coming. So there you got that. So I'll do a little share screen in a minute. I'll share a story or two, but just any questions or comments that anybody has, please feel free to chime in. And I'm going to pay attention on the waiting room to see if anybody else goes in here. So I'm going to do a share screen here. So, things there. All right. And you're looking at a big Zoom blob. A second. All right. So for those of you probably seen this before, I usually, as we're doing presentations and such, try and get these out there as well. But our webpage, a lot of buyers, especially in this day and age, especially this next generation, they're oftentimes just sort of going right to the webpage to start applications. Certainly not mandatory, but certainly, can do that at any hour, and certainly convenient for us just to sort of pop up as we're going into it. You can tinker around on there with plenty of glossary. And we've got, for those of you, if you're not already following Don or my Facebook professional page, every day we've got a whole bunch of good detail coming out with, as good as any social media detail, but a lot of these have links, like this one, for example, which, there we go. Just talks about NAR, details from the NAR report. I mean, you're not going to run to a customer necessarily and go, oh, you got to see this NAR report. But there's little nuggets to pull out of here. And cross country is looking to kind of spin this to something that you can kind of communicate with your customers. So just I just pulled this one up as an example, but we have a great one about, hey, in a competing offer situation, what are good ways to do it? It talks about appraisal gap. It talks about, having the loan officer call, and plenty about that. So just know there's plenty of resources there. While I have everybody, can't hurt to talk about interest rates. So let's start back in 1981 when rates were 18%. Makes us feel a little bit better about where we're at right now, which is less than half of that. So just to rattle on about interest rates for a moment. So going into that little 5-year look back, 5 years ago, interest rates were hovering right around 5%. Here we are today, back up 7.4. Now, this 7.4 was yesterday, back up around 7.6 today. So interest rates just in the last month, the last 6 weeks, let's go, have been as high as 8.4 and as low as 7.4. That's unheard of outside of the last 21 months.
Mm-hmm.
So it's pretty, we're seeing quite a bit of volatility. And yes, you can see this upward trend, up, up, up. But look at all the peaks and valleys. There's so many spikes and then valleys right behind it. The market really still doesn't know, I would contend, which way it's going. We don't know if we're going to be back in the 8s by year end. We don't know if we're going to be kind of back at the low 7s. My guess would be kind of in that mid to high 7s. The rally that we got with interest rates, things moving in a favorable direction, was because of inflation. If you've heard me talk, any of us talk in the last 2 years, it's been inflation is bad, that's pushing interest rates up. Well, as inflation gets better, that should bring interest rates down, and we're seeing little hints of that. The most recent inflation report will likely take out the steam. The last inflation report should take some of the steam out of the Fed, and almost a lock that they're not going to be bumping interest rates up December 1st. Before yesterday's report, I think it was only like a 15-20% chance, but all signs right now are pointing that, yeah, Fed's probably done bumping things for the time being. So anybody have any questions on that? I know, obviously interest rates are a hot topic. Whether they're up, whether they're down, or whether you're talking to a loan officer, that's usually going to be one of the first questions. But anybody have any questions or anything on the market or rates that they wanted to cover?
Sean, the one thing, the big rally we had yesterday, all over social media, I saw people posting interest rates have dropped, interest rates have dropped, interest rates dropped. But yeah, they dropped for that 1 4 or 5 hour period yesterday.
Yes.
We had a nice rally. I think it's irresponsible for loan offers to put that kind of information out there on the rally of a market like that. For one simple fact is, Sean and I both know, usually the next 24, 48, 72 hours, the market starts to calm and correct itself, and we start losing a little bit of everything we gained that one day. So I could go out there screaming interest rates dropped yesterday. By the time somebody gets a hold of me 2 or 3 days later that wants to get pre-approved or make loan application, that rate's already gone for the most part, especially in this volatile times. In a good time, like we were in 2021, where rates were just staying down, you had rallies, rates stayed down. They didn't move, as you can see by that chart there. But you can see over here, when you go to 22 through 23 of July, rates were doing this constantly throughout the day, throughout the week. So there's a lot of irresponsibility by loan officers to start putting rates have dropped out there because you got one rally in the market.
You're 100% right. It is so frustrating. I mean, loan officers and salespeople, they're in a tough spot when they're selling something that's variable and something that's moving. And you have somebody who's just throwing out, and oftentimes, I can name some ping companies out there who maybe put things who are temporarily factual, but they're doing something to say, hey, I'm going to throw this out there because I know it's going to sit there for 2 weeks and drum up some phone calls. Mm-hmm. I maybe I give too much credit for the consumer, but I don't want to be called 2 weeks from now going, hey, you said interest rates are 7.4% and they're back at 7.8%. What gives? Oh, yeah. That was just that one day. Sorry. Then I started like a shiesty salesperson, and I don't want to go that route. So right. Well said, Jay. Yeah. So the couple, I want to tell a story here. So on the Tuesday meetings and a few of these fireside chats, and we've been talking about trigger leads. So I'm going to pop up this flyer that some of you may have seen before. So just want to walk you through what happens in today's day and age when someone gets their credit pulled. And I'm going to tell you a real life story just yesterday. And you're going to hear this story for the first time and probably hear it 10 more times because I'm going to like screaming at the top of the mountain to realtors how this is impacting people. So if Bobby Z, good to see you. If Bob went and applied for a mortgage today at Huntington Bank, ABC Mortgage, whomever it was, and just went and applied for a mortgage, he's getting a credit report pulled by Huntington or Cross Country or Key Bank or whomever. And all three credit bureaus, of course, know this because they're marking hard inquiry with TransUnion, Equifax, Experian. So Bob probably has an 839 credit score, and he's real desirable to any creditor. So you know what those three credit bureaus do? They turn around and sell a lead. Hey, this guy, Bob Zimmer, is interested in getting a mortgage. He's got a good pay history. He's got good work. Here's a name. Here's a phone number. He is now in a database to whoever wants to buy that. And Bob would probably get no less than 40 phone calls or texts over the next 24 or 48 hours. So I don't know if anybody's applied for a mortgage, but that is 100% happening. We call that trigger leads. And a buyer can opt out of this. There's a, basically like getting on the do not call. So where's it at on here? Sorry, I thought I had a quick reference on it here. Oh, optoutscreen.com. It takes 3 to 5 days. So I'll mention it now. This may not be a bad idea. We posted on Facebook. I'm talking about every opportunity we can. And of course, you might think, oh, of course, for a buyer to get 40 phone calls, and this is no exaggeration. If you have a customer who's been through this, they're getting 20, 30, 40, 50 phone calls on this. And it's very confusing, especially to kind of the layperson who just says, hey, I just talked to Sean, and all of a sudden Sean must have put me on some sort of calling list. And now I'm getting hammered by people. Well, if you think it through, I don't really want 50 competitors calling my customer, whether it's for confusion or competition or anything else. So that if I just stop there, you may think, okay, that's a good reason to call this. Now, let me give you a live scenario of someone who I had a doctor's appointment Monday morning. 9:30. I was in my doctor's appointment. I got a call at 9:30, went to voicemail. There's a previous customer I worked with 3 years ago, just got engaged. They're buying a house. They're having their eyes on a property and need to get moving quick. I called them back at 10:15. So in 45 minutes, went to voicemail. I said, hey, feel free to give me a call. Send a text later in the day. Hey, I'll be working this evening if you need that pre-approval. Yesterday morning, 8:15, reached out to the buyer and said, hey, just wanted to find out. Not sure if you're kind of in the thick of things. You know what, Sean? You unfortunately, you didn't answer quick enough. So I went and got another pre-approval. So shame on me for going to the doctors and not picking up the phone. But by 45 minutes, I missed that call. And I happened to say, I said, I got pre-approved already. She goes, yeah. And they gave me a pretty good interest rate that I don't think you can beat. Okay, well, that conversation went on a little further. I said, by the way, who is it? She said, and these were her words. Well, I called Third Federal and submitted an application, and they had Quicken call me back, or a Rocket Mortgage call me back. Mm-hmm. I said, oh, okay. Well, I didn't realize Third Federal and Rocket Mortgage partnered. I didn't say that. I'm thinking to myself, well, here's what happened. She submitted an application with Third Federal. Trigger lead went to Rocket. Rocket calls her, and she has no idea. By the way, she's no dummy. This is her second time buying a house. She's got a molecular biological degree in something and a doctorate. And she thinks, oh, I called Third Federal. Rocket Mortgage is calling me, asking me some of the same questions, but I got a pre-approved from Rocket Mortgage, Sean. So I said, okay, well, Third Federal and Rocket Mortgage are two different people, but hey, don't worry. So anyway, the conversation kind of just stopped there, and you think, oh, well, too bad for Sean for not answering the phone. Too bad for Sean and Third Federal, because now Rocket comes in. Rocket comes in kind of, sort of, I would say a little tricky, because somehow she thinks that she already applied for a mortgage and Quicken is just calling back. Take this conversation a little bit further, because I'm still on the phone with her. This is now a 15, 20-minute conversation. And again, we're friendly with each other. This isn't a salesperson, me trying to talk her in or out of something. I did her loan 3 years ago. She reached out to me. She's perfectly happy, was perfectly happy with my service. and I'm sorry this is getting so wordy, but now she says, I asked, are you still working with the same realtor that we worked on the last one? No, I'm working with my fiance's realtor. He has a friend, but Rocket Mortgage said if I work with their realtor, they're going to take $1,000 off of closing costs. So now Rocket Mortgage not only is trying to steal this customer from Cross Country Mortgage, from Third Federal, they're also trying to get, pull the agent as well. Now, this particular agent is going to be selling her house, the fiance's house, and the house they're buying. So here's Quicken trying to, for some, probably ridiculously low referral fee to an agent, steal these 3 deals and, say what you want about their costs and fees on other things. It's not a good deal. So if this person, had known to opt out of, they would be just talking to myself and Third Federal, frankly, and I certainly wouldn't be trying to yank them from their current realtor or a previous realtor that I worked with. And I doubt Third Federal would be doing the same. So not to sort of drag one particular company through the mud, but that's what's going on in this world. So
That's what they do, Sean. So drag them through the mud. That's that's what they do.
Well said, Don. Thank you. This is just infuriating me because, everyone, the veteran loan officers, especially Don, myself, we have so many relationships, good relationships with good veteran agents who, whether they're brand new, whether they've been in the business for a while, everyone's trying to get direct to consumer, and they're using the sneakiest ways between databases and this trigger leads. Now, there's been a bill in Congress for 6 months to get rid of trigger leads. Guess what? Senate and Congress aren't going to save the day on this on any time soon. But I just want to make sure, we've been whining about these because it's a nuisance to the customer. Customer doesn't want, if the customer wanted to get 40 quotes, they'll go out and get them from reputable places or just put a place in line 2 or 3 places and go that route. They don't want to apply with one lender and then sort of a black cloud of 1,000 other places getting over. So lenders are undercutting each other because businesses drop. There's no refinances. You got people who've been doing this for 2 or 3 years, waiting for the next refinance market to hit. You have people just trying to swoop in and work in business they haven't done before. So there's 1,000 reasons to work with somebody, but throw this into the mix and it just gets straight up confusing. So I haven't talked to Mike and Eddie about this specific one, but I definitely want to spend some time on this one of the next few Tuesday meetings, just because it got under my skin so much. But any comments, questions, thoughts on that? No. So optoutprescreen.com just rolls off the tongue, but that's where somebody would want to sign up to take that off. I did it. I don't know what else it opts me out of, but I don't want to be solicited by anybody for that matter, let alone other mortgage people, should I decide to get a home equity line of credit, or even, it would be interesting if I refinance my loan with Cross Country Mortgage, all those same alerts would pop up, presumably. So, Don, anything you want to add on that?
No, like I said, it's just drag them through the mud because that's what these people do. We try and let the consumer know, there's sometimes we'll do the soft full credit report to try and avoid this initially, but we do let the borrowers know that, listen, once I pull your credit report, you're going to be in for a lot of phone calls and text from random lenders that are not working with Cross Country Mortgage, but will say they are to try and get your business. And they will quote bogus artificial rates to get you to come over to the dark side. So we try to educate as much as possible. The best way to do it is this opt-out flyer. And I think Sean and I will put this out there so that you have it to give to your customers to opt them out of these phone calls.
Mm-hmm. So I just wanted to touch on that one. And again, you'll probably hear, I'm like screaming from the top of the mountaintops on this one a bit more. Some of our popular programs, you may have heard this on a few of our other meetings as well, but we did roll out our 15% no PMI. We got a cute little name for it, Bye Bye PMI. Had a customer, they sold their house here, moved to Florida, ended up buying a house a little bit higher than they wanted, and they have the 20% down, but it was going to stretch them thin. And basically just said, by the way, since they got pre-approved. They've been looking for a couple of years, but they got pre-approved. And this program we just rolled it out within the last 4 or 5 weeks. Just came and said, hey, we can do 15% down, same interest rate, no bump. And they were like, yeah, sign me up. They could always put more money towards the mortgage later on. So there's that. And also remember where that comes in handy is if you're worried about a short appraisal, someone's buying a $200,000 house, putting $40,000 down. You think, great, 20%, no PMI. That appraisal comes in at 190. Well, bummer. Now we could still do the same loan. We could still do the same interest rate, but now we got to pay PMI. This 15% no PMI program, it's the same because you're still borrowing less than, in that example, 85%, no PMI required. So we're winning big with that one. The $4,000 down payment assistance, it's a straight grant. It's a lot of grants are forgivable second loans. This is a true, hey, here's $4,000. So what it is, if you got for a first time home buyer, income is under 75,000 a year, we'll give you a 2% grant. If you're putting 5% or less down, that shows us you need it. We'll give you a 2% grant. So $200,000 house, we're going to say you need $6,000 down, but we're going to give you 4 of that. So you can buy this house with $2,000, or excuse me, 2%, 4,000. Excuse me, sorry. I am good at math. I'm just 3% down, 2% coming as a grant, 1% down. Seller can pay closing costs, buyer pays 1% down, takes an online home buyer's course, no bump to interest rate, no bump to closing costs. They actually get a discount on their PMI. It's been the most, easiest thing to talk about because but it's got higher closing costs like the OFA program, right? Nope. I got to pay it back if I sell the house like the OFA program, right? Nope. Is there some other quirk? Do I have to wait for a secondary approval? No, this is underwritten and approved by Cross Country Mortgage. We don't have to wait on, Greater Circle Living. We don't have to wait on Columbus to look at your tax return. So it's just a fun program
You should throw a Smart Start flyer up there.
There we go. There you go.
That's the name of the program, Bob.
Oh, cool. There you go. Smart Start, what we call it, I think, right? Yep. So it's been fun.
And you'll have another lender, the one we just dragged through the mud. They advertise this as, hey, we have a 1% down program. This is what it is. That they just call it the 1% down. We just refer to it as this.
And this is available in all markets. I will say, $4,000 goes a long way in northeastern Ohio, or 2%. However way you look at it. So it's been a great kind of foot in the door. An example, the first one of these I had a couple buying like a 240 house, and at first glance their income was 125,000. Husband made 50, the wife made 75. We took the wife's income off of the application to sneak under that 75. It was actually 72,000, whatever it was, her income, and we were able to get that. So this isn't one of those, oh, you made too much money last year. If their qualifying income comes in under 75, we can make it work. So it's not my $4,000. So I'd love to grab it and give it to people one way or the other. So those are some of the as some of you jumped on after the fact, as I kind of started to say, this is kind of, the Fireside's more or less supposed to be an open chat, but I end up just rambling on about some different things. But I'm curious, I guess, what you guys are seeing out in the marketplace, and whether these tools will help, or if there's other things out there you'd like us to chat about today. You know what? I see the request. I'll put the flyers right in the chat here. I know you guys have heard me talking about buy downs. Do you? Oh, it's not letting me put it in the chat. I'll send this to you.
Email them to everybody that's on here.
Yep, and Terry. Okay.
Are you doing
so I'll
new
send this to you. What's that?
Are you doing new construction loans?
We are. So, and Don, feel free to chime in on this. So we do new construction on VA. We do new construction on FHA. We do new construction on conventional. VA and FHA has been a little bit of a boost in trend. I think purely because there's not many other lenders who do that. The program is a little bit set up because the interest that gets paid normally through the build gets added on. There's some extra requirements for FHA and VA as far as being an approved builder, but we do those. and as a company are doing a lot of those. We have a conventional version, conventional construction. It's a good program. There's some lenders requiring 20% down. We don't. Our rate on the construction period is a little bit higher, but we allow the buyer to float down after the house is complete. So we've got some weird quirks that sometimes set us aside from the rest. But yes, we do construction. Don, anything you want to add on those?
No, we'll go out 12 months on these locks as well. Like Sean said, it appears that ours might be a little costlier, but what we do is we build in everything into the loan. The buyer's essentially coming up with their down payment. I think they build in the interest payments over the course of the 6, 9, or 12 months where they lock it for. And if I'm not mistaken, we also build in the closing cost into the loan. So the out-of-pocket ends up being about the down payment again, if I'm not mistaken.
Yeah, there's if you got a buyer who's a little tight on cash, or it might, someone who qualifies, well, I still own my home and I want to build a new one, but they qualify for the mortgage, but they don't want to stomach the double payments. That's going to be where we provide a nice solution for it.
Yeah.
Yep. Any other questions?
On the 15% bye-bye PMI, are there any other criteria?
Yeah.
Is there something like loan, like income or value of the house?
No, the only two restrictions or requirements we have for that particular program have to have a 740 PMI, and the debt ratio.
Wait,
what's that?
What's
740 credit score.
Yep.
Okay.
740, and then the debt to income ratio, which we monitor. You as a realtor don't get too involved in this probably, but the debt ratio has to be under 43. Now, normally we can go to 45 or 50, but 43 is where we cap it just for that particular program. So, if someone's really, at a 50% debt ratio buying at the top end, there's an alternate 15% no PMI, but there is a little bit of a bump to the interest rate for that. So this one,
on this one, Sean, keep this in your back pocket. You get that buyer's putting 20% down and doesn't do an appraisal gap coverage, and if appraisal comes in short, here's your answer to that, where it doesn't cost them anything more out of pocket.
Yeah.
Right. Okay.
This has been a big win to talk about. And again, we've always had a version of this, but there was a little bump to the interest rate. So I was like, well, I could do this for you, but this has, no drawbacks. And, especially with that appraisal gaps, it's a nice little shoe in. We're seeing a boost. I should say I'm seeing a boost of VA loans. I think it's coincidence, but I swear every time this time of year I see a boost. I don't know if everyone's like, it's Veterans Day, let's go buy a house. But just have four VA buyers in the pipeline right now. 0 down, no PMI. The seller can cover up to 4% of the price towards closing costs. I have one transaction where the buyer's paying an appraisal fee, home inspection, and the earnest money. The math isn't final yet, but when we go to closing, they're going to be getting a check back because their earnest money covered essentially. They're getting the earnest money was over the inspection, so they're going to end up having $1,000 in their pocket once all is said and done. So don't be afraid of VA loans. I think with the market turning a little bit, we're not getting as much pushback on the FHA stuff and potential repairs and things. So we're seeing a lot more government FHA and VA loans. Speaking of veterans, if anywhere happened to be at the Browns game, not the one in Baltimore, but the one previous, the guy in the end zone holding the 100-yard flag, that was Don. We cross country was a big on-field sponsor, and then they gave a check away. What was the deal?
We gave a check to a veteran couple in town. Both of them were veterans, husband and wife, $25,000. We did the same thing last year for a couple in Parma.
Oh gosh.
Cool.
Yeah. So every year, we choose. November's we recognize the veterans. Well, we recognize them all year long, but cross country makes November Veterans Month. So we do quite a bit for the veterans. That goes. We don't talk about it enough, probably. But Ron Lenhart is a huge veteran advocate, just as I am, just as Sean is. But you know, that whole 100-yard flag you see at all football games or all college games, football, wherever, that's put on by a company called 50 Star Productions. They do this all over the United States where they have these flags and they'll do it. If you see them in the stands, we're doing the card flips and all that. That's all put on by 50 Star Productions. But it's a really cool event. And it's great to be a part of. This is great to be on the field with the veterans. There were 60 of us from Cross Country Mortgage. That some were veterans or some were employees who had veterans in their family. I had my nephew who's a veteran with me. He did with me last year, and it's just it's a cool thing to be a part of.
Yeah, Don and I have each been here for cross country, that is, for 7 years, and to see where they've grown as a company. But as I tell people, when we came to cross country, there were about 800 or 900 employees, and now there's up over 8,000. But they've really, as they become more national here locally, and obviously they have a relationship with the Browns, so that kind of goes a long way as far as. But the food bank, they're all over that. My mom she always has to call me and go, "Do you know this guy?" I go, "Yeah, Mom, it's Craig, the guy head of sales." Now he's at the phone bank doing dog charity, giving away dogs or something. Then he's at the food bank. Then he's at the Browns thing. He serves many more roles than that specifically, but really is cool to see them grow as much as they have, especially within the community. And the guy who owns this company, never went public. This isn't like a stock in cross country you could pay for. If you could, I would have bought some for sure. But it's a guy who's stayed humble, stayed local, and yeah. So just, I guess that was a little bit of a tangent there, but it's a nice thing just to chat about. Yeah, but anything else, Terry, Maria, Bob, Mr. and Mrs. iPhone? Anything else you want to cover here today?
Are there any new programs that help out teachers who may have already bought, so they may not be first time, but is there anything out there for teachers?
There's two. One you don't hear about very much. Sorry, the leaf blower just, I don't know if you could hear that. I apologize. So first one, I'll talk about one which you're still not going to see for quite some time, but the teacher next door, the police officer next door. This one you might see someone in a random Facebook post, but this is if you're a teacher or police officer buying a HUD home, so a house that was owned by someone with an FHA loan, then was foreclosed on, now HUD is reselling it. Well, if you're a teacher or a police officer, and there might be a few other qualifiers, you get kind of first dibs, sort of special treatment on that offer. And even if your offer isn't one of the top, very likely to walk away with it. And you only need $100 for a down payment. So just mentioning that one because that one gets a lot of press. There aren't many HUD homes right now because there's been the pause on foreclosures during COVID, and with the equity and rates that have been there haven't been many. But if you hear foreclosures going up, you might hear that program. Then there's the Heroes program through OFA. And Don, correct me if I'm wrong. OFA's tweaked a bunch of rules over the last couple of years. But OFA used to be just for first-time home buyers. You can be a repeat buyer with OFA. Now, OFA we usually run to for the grant because you can get a 3% or a 5% grant. So just to walk you through just basic OFA first here, you buy a $100,000 house, you can get a $5,000 grant. That covers all of your down payment on an FHA and a big chunk of your closing costs. Now, the drawback is there's income limits. Sometimes the rate's a little bit higher. But if you sell that house, move out of it, or refinance within 7 years, you may have to pay a portion of that grant back. So that's one of the drawbacks. But also within OFA, the Heroes program. So if you're a police officer, full-time police officer, nurse, teacher, a lot of medical fields will meet that, but you'll get a quarter discount on the interest rate. Mm-hmm. So the program, sometimes the rate's higher, but then that discount brings it down. If you're not getting the grant, the rate is going to be pretty darn low. So sometimes you would go there just for the interest rate, and repeat customers do have that option. As I'm talking with a customer, like if I'm doing a pre-approval, we'll talk about the OFA program and say, hey, we're going to get you pre-approved for non-OFA and OFA, both just to have, because the rates, as rates dropped last week and went up a little bit they went up last week, dropped yesterday, went or dropped Monday and Tuesday, went up a little today. Anyway, they don't move in sync. Sorry, that's what I'm getting at here. So one day OFA may look like a great deal, and the next day not so much. So
yeah, let me enter that right now because I'm just pulled up the rates for OFA today after yesterday's big drop. For first-time homebuyer program, FHA, VA, USDA, with no OFA assistance, just being a first-time homebuyer, that rate today is 6 7/8. That's strong.
Good. Yeah, I'm glad you pulled that up.
6.875. And if you're a veteran or a hero, let's just say, that rate is 6.625. That's strong.
Huge. Yeah, I'm glad you pulled that up.
Now, where Sean made the comment, if we use down payment assistance, the rates are going to be higher. You know, if you get the 5% grant, that rate goes up to 7 7/8. It's a full 1% higher. But again, if nobody has any money whatsoever, this is how we get them into a house.
Yeah, it's kind of, you know, for some it's a break this class in case of emergency. For others, it's a nice little add-on, but it's a great feature. And then there's a few other products within there as well, but it's, you know, we probably don't talk about it as much as we should because we kind of take it for granted. OFA's been there for forever. There was a short period when they were out of funding and they weren't around, but for the most part, they've always been there. And OFA's there too post-closing. If you know people have problems making the mortgage payments, things like that, they have counseling, they have emergency funds. So they're really it's a state-funded program through bonds, and that's what we call it, the bond program. But really, is a cool product. Yeah, cool. Yeah. Any other questions you guys might have, or any other topics? No. Well, just know as I can't remember who was on, but yeah, if you're working, we're working. But you know, any questions that you have, you know, evening, weekends, Don, myself, Chris, who pops on these as well. We just want to be sort of all things to all people and accessible as possible. If ever, you know, you have, and I think for those of, I know most of you guys on here, but if you got a problem on a deal that's not ours, hey, we love those. Are sometimes we love hearing about other people's drama that's not ours, especially when we can come in and try and save the day. Sometimes it's like, hey, let's do the application over here, or hey, why don't you do this or suggest this to your buyer or loan officer. So anything we can do to help, we're a partner with Keller Williams to hear and help your business. So these fireside chats, we're doing 1 or 2 a month, probably one next month, just because the holidays squish us in a little bit. But feel free to come in with ideas, whether you want to email ahead of time, drop something in the box, or just reach out. But you know, certainly you don't have to wait for these. We'd love to connect.